Hey everyone, it's your favorite gentleman, Marcus Norman of Gentleman Style Podcast Show. And today we are going to talk money, finance, and everything in between. This is my favorite topic to have. And I have the expert of all experts. This woman is changing lives. She's an incredible woman. She's helping you, me, and everyone get to a better place financially. And her firm, her company, does it all with wealth planning, financial advising, and even your fractional CFO for your company and your business to help you take things off. She does it all. Again, financial planning, investment advice, retirement planning, tax awareness investing, which is very uncommon, especially for my affluent followers who tune in and are needing a second opinion on their taxes and what they're doing and what they're planning, especially to going into the future. And I have this very special woman coming to the Gentleman Style Podcast Show, Miss Nicole Meihofer, coming to the show. And she also, for this full disclosure, I have to protect my guests coming to the show. Nicole is an investment professional registered with the IHT Wealth LLC as a registered investment advisor with the SEC. But her opinions expressed are solely those of the author and do not represent those of the company or the companies she affiliates with or the partners she affiliated for. And this is just for informational purposes only. Like I said, like you guys here, don't listen to the advice of a YouTuber, but listen to this conversation and you will find value in what she has to say nonetheless from this conversation. So without further ado, help me welcome to the stage Miss Nicole. Welcome to Gentleman Style Podcast Show, ma'am.
Thank you for having me. It's a pleasure to be here.
It's a pleasure and an honor to host you. And thank you for saying yes. I hope you don't regret this. But thank you for saying yes to be a guest on the Gentleman Style Podcast Show today. Ma'am, I applaud you for going down this road. When I want to start soft with a curveball, when did you first notice that you had the gift, the monetary gift, the gift to build businesses, but also help people in the financial space? You could do anything. You could probably still could do anything. But why financial space? I want to get to the heart, the meaning behind why you do what you do and why you've helped and changed so many lives today.
I loved money and finances from when I can remember. I started working when I was in high school, and I used to take my paycheck and I used to go to the bank and I would deposit my check. And at the time you had this thing called a passbook. So they actually put what the balance was on your passbook. So I got to take that home with me and I got to track on a piece of paper what the balance of my account was. And that was the first time that I got the taste of, this is interesting. This is exciting. You can work, make money. And, at that time, I didn't know what it meant to spend money was. But I learned, obviously, as we all do, that it's also really fun to spend money and buy things that bring you joy. So as I entered the professional working world, I didn't start off in wealth management. I actually started off in the fashion industry, but I was helping all of my colleagues and my bosses investing into their 401k, helping them understand what it meant to invest in a 401k, what it meant to invest in the stock market. And that really drove my desire to want to learn more about what it meant to save and invest and build wealth. I started working at Merrill Lynch. I was working in the high net worth office, and I had a front row seat into how ultra high net worth individuals, so the ultra wealthy, invest their money, the family dynamics behind it, and really got to see how they interact with the world, especially with their money and finances, how they spent their money, how they invested it. During this time, I dealt with a tragedy in my life. I lost my mom when I was 29 years old, and that just shifted everything for me, because so much of what I was exposed to on a daily basis and the conversations we were having, were, okay, how are you going to save and invest and have enough money to live off of? Or What do you need in order to retire? I was running scenarios and all these conversations I was having and all these educational seminars I was going to. It was about, what do you need to retire? None of the conversation was, what do you need to do and how do you need to invest, spend, and save your money today in order to enjoy your life today? And so that's when I realized I have to do this different. I have to position myself. So I exited Merrill Lynch and started my own business. I did start with a business partner. I've since exited the business partnership and started my own practice. But the whole reason we left was to create a firm that had access to different investment products, gave us the freedom to run the business the way we wanted to, and then also didn't limit us to what professional partners we can partner with. And from there, the rest is history. And I've had the privilege of, working with incredible clients and some incredible business partners and professional partners that have just allowed me to create this space to help clients, invest, but also use financial planning as a way to drive their dreams today and also make sure that they have money to live off of in retirement or today if they want to live off their investments today.
Yeah. Do you see that, y'all? Do you see the fire? Do you see the passion? Do you see why she got into this? And I want to pay some, and thank you for sharing your heart. Condolences for your mother. Incredible heart of gold. I want to pay some homage to mom and ask, can you share some of those conversations around money? Was mom and dad, were they having the money conversations with you? Or were they not having the money conversations with you? Why do you think mom and dad encourage you to get your own passbook and see dollars make sense? Like literally see it live, feel it, smell it, holding your hand. Why do you think they did that?
My dad, he was a workaholic and he worked hard his whole life. He was a lawyer. He was at the office on weekends. And I heard him talk about invest and save in your 401k. I think he told me about it at least once or twice a week. Every conversation was, you have to save for retirement. You have to invest in your 401k. And so I grew up thinking that was investing. And cheers to my dad for educating me and having those conversations. My mom, she was not the one who was in charge of the finances. My dad was, in the traditional sense, that's typically what you hear is like the man's in charge of the finances. But my dad was awesome. He brought me into it. He helped me understand what that was. But at the same time, like that was the extent of the education that he provided me, which is invest in your 401k, which I would say is probably true for a lot of millennials who are out there working, saving, investing. So when I went into the finance space, I thought that's what it was. Again, I started helping people invest in their 401ks, and that's a small piece of it. Yes, investing in your 401k is very, very important. But in my parents' case, my dad worked so hard saving and investing and built up this, really, great nest egg that, he's able to provide for himself. He doesn't have to rely on me for support, which is sometimes that's a reality for, kids. And the only caveat is my mom passed away when she was 59. And they had all these trips planned. They had this beautiful trip to Italy planned, and they were going to do it when he retired. And instead of thinking about how can I spend my money intentionally during the years that I'm working and accumulating money and enjoying my life, it was this push, it was this drive to just accumulate wealth for this distant dream and goal that never happened for him. And it's really, really hard to see. So, I am grateful for what he gave me and grateful for the experience that losing my mom at a young age gave me. And that's what I take into every interaction with my client. And just when I'm having these conversations to help people kind of get out of that mindset of we need to have this intense energy. We have to accumulate. Like, it's cool to spend your money. Like, cool to, invest in things that will bring you joy today, like taking a trip to Italy.
I love that. This is, oh my gosh. Thank you, mom and dad. I'm so happy y'all have we sound similar, right? We sound similar. My dad, hardworking man, hardest working man I know, but that was my first example. It's like, okay, I gotta bust my butt. I gotta go out there and make the money. Mom wasn't financially astute, and so and yeah, when I got into finance, it was it was like, wow, I got to rub shoulders with someone who's I'm here working my 9 to 5 and they're on the golf course. Why? How? What's your secret? I've been working since the age of 10, and haven't stopped since, but the work has changed, and I work less the physical and more of this, right, and the money. So you're
Hmm.
right, money is that worker bee that I can put to good use, and make it work for me. So I really commend mom and dad for what they've done and poured into you, and invested in you, because you're the future, right? And then now it's our turn to invest in that future. I want to dig into a belief that you may have had. I think money and finance changes just like a person does. So can you share one money belief that you had to unlearn in order to grow into the person you are today? And I'll share mine. My money
Hmm.
belief when I grew up was put your money in savings, put your money in savings, always have a rainy day fund. And then I had to uh, modify that to say, no, you need diversification. And so I had to change my belief as, okay, I need to put money away into the savings account, money market account, or CD. My grandpa built our entire house off of certificates of deposits. And for those that don't know about certificates of deposits, we can have that conversation. But grandpa built an entire house. My grandpa was the most interesting person I ever met. He owned a plane, right? All off of investing his money. And I had to change my belief around putting money in this savings account to now diversification. What's a money belief that you had to change in order to grow into the woman that you are and now serve hundreds of clients today with?
Yeah, that you should do it all yourself. My dad, he can come over, he comes over and he paints my walls. He will help me with gardening, because that's what he did his entire life. Is he didn't hire other people to help him, because he wanted to save every single dollar that he could into his future. So this man, I'm telling you, I always tell him, you should have been a contractor, because you're capable of doing every single thing around the house. He never hired anybody. He did it himself. So I went into that in my life with that mindset of, I have to do everything myself. But I just was burnt out and it didn't bring me joy, and I wasn't doing things the right way. And so once I got to a point where, like, we just have, we're taught that spending's bad, that we need to look at our money and figure out where we can save, and look at every little minor detail and cut down where we can, instead of looking at how we're spending money as an investment. So in my life and in my business, I look at outsourcing as just a way to create more space for me. And so when it comes to my kids, I look at spending a lot of money, because I've spent a lot of money on daycare. That's an investment into other people to give my kids what I can't during the day because I'm working. That's not a cost, it's an investment. They're giving my kids love, they're giving them education. In my business, I've structured it so that, listen, jack of all trades, master of none. I have this incredible practice, incredible clients, and they come to me and they know that I have found the best person out there to provide that component of my service. So, for instance, like, I'm not going out and I'm not picking stocks for you. I
Mhm.
have gone out into the marketplace, because there are so many incredible people with huge teams behind them that are doing investment analyst work and stock research on a daily basis. They've got 100 people on their team and they're looking at the best stocks, they're creating the best products, they're looking at the winners, they're looking at the growth potential opportunities. And I'm hiring them as my investment analyst. they're helping me implement these investment strategies. So if I try to become the best investment analyst of all time, well, you know what? I should be starting a stock picking firm. But I've created a wealth management firm. And I don't think I would be here without having to overcome that you have to do everything yourself and you can't pay other people to do it. Even if that means I make less in my business because I'm paying somebody else to do something, and I still see it in the industry a lot. A lot of, advisors will just want to do it themselves because it will save money and then they'll make more money, but that's just not the best thing for the client or them.
Absolutely. I want to, this is good. This is sauce, right? And this, no, I really like what you said. And I want to kind of segue this question into two parts. One, I want to ask a question about finances. How do you now adopt financial habits in your home? Because my thing is, yes, I want to invest in the daycare and the schooling and and the systems and the things that are going to be around my kids during the day. But I also think to a degree that money habits are mimicked from our parents. And
Mhm.
so that's one part. How do you when the kids come home, how do you continue to invest? What habits, what things do you do to continue that legacy that your mom and dad started with you, so that your kids can continue to put. I'll give you an example. Oftentimes, if you ever visit New York and you meet a sneakerhead, right, and you meet someone that's
Yes.
like, I got all the Jordans, I got all the Timberlands, I got all. If you meet their parents are the exact same way. They adopted it from not only from school, not only from daycare, from their friends and people that they meet in those environments, but mom and dad are the exact same way. I got every designer shoe, I got every, I got the glass slipper from Cinderella, I got the whole mom closet. Mom has several closets, and those habits perpetuate because they saw mom and dad do it. So, and then the second part to that statement is, when it comes to building wealth, is it investing in assets that make me money, or is it invest? Because I've heard where a financial advisor say, someone who owned a business, $1 million business, CEO of his own company, he makes 500K a year, and he's coming to you, Nicole, and saying, Nicole, I make $500,000 a year. I have $1 million to invest. Should I invest it in with you, or should I or should I invest it in my business? And the financial advisor said, invest in your business. Why would you stop the machine that's been working all these years? And so that's my kind of two-part question is, how do you invest and educate your kids and continue to instill the habits in money management and wealth accumulation? And then what would you say to someone is the kind of cheat way to build wealth? Is it buying businesses? Is it buying stocks, bonds, mutual funds, or is it real estate? Is it Airbnb? Is it ice hockey? Where should I put my money so that I can be on the wealth management track? I know that's a lot. I know there's a lot. They're like, gosh.
I think I digested it. Think we're good.
Okay.
Yeah. I love sneakers. You could say I have a little. You could say I have a little bit of a habit, to be honest. But P448 is where my issue lies, not with Nike, which is where aren't most sneakerheads aren't they into like Nike and Jordans?
There are Nike and Jordans, but
Mm-hmm.
again, any of the habits, any of the things,
Yeah.
and
Yeah.
I'm not saying that to say that's bad, but
Yeah.
I think when you can afford it, what did Jay-Z
Yeah.
say? If you can afford it, if you can buy it twice, no problem. So
Yeah.
being able to afford those things, that's not an issue, right? I
Yeah.
wouldn't say that's a problem. But we have met people who do make it a problem when there's zero in
Yeah.
your wallet,
Mhm.
and but you got every sneaker and name brand. So I don't
Yeah.
imagine that's the case with you or anyone who's in your circle. I imagine that's not a problem. But help the young mother who's watching you right now figure out what to do with her kids. Is it, should I pay them? Like, I've heard that debate. Should I pay my kids to do chores? No, because that's not how life works. Maybe. It depends. It
Mhm.
depends on what path that
Mhm.
child goes on, but I don't think that's necessarily bad, getting them associated with money. I think we're doing the opposite when we don't bring up
Mhm.
the money conversation with our kids. How do you bring up the money conversation and the conversations with your kids, your family?
Mhm. Less is more,
Okay.
but the dialogue that my kids hear between my husband and I believe is the most critical thing.
Absolutely.
If there's a positive that happened, like one of our investment accounts did really well. We talk about it and we get excited about it. If there's something negative that happened or something we want that financially is not the best decision right now, we don't say things like we don't have enough money or we're struggling or that type of, even if it's true, and you may disagree with me, I do not believe that you should let your kids in on those types of intimate conversations because it puts it in their head that we're struggling. Mom and dad are struggling. There's no money. Is it always going to be hard? So with my husband and we really try hard not to include our daughter or son in conversations and my son's only 2.5, so he's not really relevant in this conversation. But, it's because a friend of mine in the neighborhood, she has her dialogue that she has just with me and her son's in the room is that I can't afford it or I don't have enough money, and then her son, I've heard him say, for example, the ice cream truck, pulled up and he goes, oh yeah, I can't get ice cream. I don't have any money. And the thing is, like, they can afford ice cream. So it really broke my heart to hear this kid say, I can't buy ice cream because I can't afford it. I know that's not what his mom wants for him. And I know that she is speaking in a way that's, she's not thinking about it or worried about it. She's just speaking how she feels in the moment, but it is very harmful. And it puts those ideas in kids' head. And because my dad was so focused on that, he had that sort of that lack mentality or that accumulation mentality. I have to go without this extra help because I have to accumulate money. I don't want our kids thinking that we can't afford it. We're choosing not to spend our money on this. So I like to say a lot of times, we're going to choose not to spend our money on this so that we can take a trip to go see your aunt and your cousin in Denver, which we do that a lot because we love Denver and my sister lives there. And then we're keeping it really simple. So my daughter's 6. We have a piggy bank and she puts money in there. And when she wants something, like an ice cream, we'll say, go to your piggy bank. Let's see if you have enough money to go get ice cream. So right now we're keeping it simple. They're not at the point where, I want to give them a debit card, but definitely that's something that's coming down the pipeline is giving her a debit card so that she understands the difference between a debit and credit card. Because that's something that we don't teach kids early enough is just because it's a card, her and her friend were scheming the other day and they come over. I didn't know what they were talking about. And she goes, can I have your credit card? She's like, oh, you know what a credit card is? She's like, yeah, we want to go buy ice cream. And I was like, oh, well, do you know how that works? Yeah, you give me the credit card and I buy the ice cream. So I should probably start that conversation earlier than later because now she knows what her credit card is. But it's little things like that. And I did open up a custodial account for her so that we can, utilize that account and pay for things while she's younger. If she wants to sign up for a dance class, I'll go to the custodial account and take the money out. But I talked to her about how much money is in that. And I talked to her about investing and what it means to invest. I also talked to her about the fact that I own a business and what that means. And so she, is really loves dogs. We have a bunch of dogs in the neighborhood. So now she wants to start a dog walking business. And we have conversations about what does it mean to start a dog walking business? Okay, if you start a dog walking business, like what will you do with the money that you make? Right now it's buy ice cream. But I did get her to say recently, buy ice cream and invest it. Does she know what investing is quite yet? I don't know if she can grasp the concept, but we're starting to have those conversations, and I'm starting to introduce this vocabulary into her world that typically isn't introduced, because right now, all the moms that I'm talking to, we're worried about cheer camp. We're worried about going to dance class. We're worried about, is my, kid reading? How are they doing in math? Like, do they know what investing is? They should. They're 6. They should at least know the word. Do they know what it means to spend money and where that money comes from when they're buying ice cream? So
Absolutely.
that's, I guess, the answer to the first question.
That is so good. To answer your question, I don't disagree with you on not cluing children into when the family is struggling. I think that's a case by case basis, but for the majority, I don't think that's necessary to bring your kids on your financial woes. I do agree with you wholeheartedly that delayed gratification should be talked about. Learning the difference between, hey, do I need this thing now or can I wait later? I love a really incredible test where you give your child, you offer your child a cookie. It sounds like this household is ice cream, so you offer your child a ice cream, but you offer your child an ice cream bar, and you say, "Hey, you can have this one ice cream bar right now, your favorite flavor, or if you wait 10 minutes, you'll have 3. I'll give you 3 ice cream bars," and see what that child naturally gravitates to see if they're already open to the thought process of delayed gratification. Well, if I wait 10 minutes, mommy will give me 3 ice cream pops instead of 1. I'll actually have more if I just wait these 10 minutes. And that is a part of investing. I do agree with that conversation that you're having already. So shout out to you. I really want people to tune into what you and your husband are initiating because it's necessary. That's why I even asked the question. It's necessary what you're doing, and I want to get it out. And I sensed it in you, and that needs, because we're not doing well. Our children are not doing well with money. And with respect, I can't give you what I don't have. So if mom or dad don't have the financial wit, mom and dad need to be educated. Mom and dad need to get with a financial advisor to educate mom and dad, so mom and dad can take these things home. But I recognize that we weren't equipped with all these tools. Hence why we have a financial advisor, Miss Nicole, on the Gentleman Style Podcast show to help us get uncomfortable so that we can build a better tomorrow, a better future. And so, yes, all that you're doing. The second part to that question, what would you say to that family? Should I invest in a business? Should I buy businesses? Or should I invest in, for that, should I hire a financial advisor and invest my money in what's the best wealth asset to buy?
I'd love to say go buy cryptocurrency or go buy property. Like, how easy and how much easier my job would be and how much more wealthy we'd all be if I could just go tell you to do something and you'd get rich instantly, which, by the way, social media likes to do that. They like to trick you into thinking that it's this, or this. So here's the thing. It's all of it. Now, is it all of it for you? Maybe not. Maybe it's a portion of it. But what is your goal? Like, what do you want to invest in? I need to know before I can tell you that. I mean, we'll get into some ideas, but why do you want to invest? Like, the thing is investing is really the easy part. The hard part is figuring out your ecosystem, your infrastructure, your goals, and what you need to accomplish those goals. So, for instance, one of my clients, I'll give you an example of one of the clients that I worked with, and then we'll get into how we create a portfolio and how we determine what the right investments are to invest in. So they came to me, they inherited money from their grandparents. Their grandparents ran a business, sold a business. They inherited money from it. No education, nothing. Didn't really have any money themselves. They were working. So this was all very, very new. Came to me and said, okay, well, what do we do? We'd obviously like to invest. And I said, okay, let's back up a second. Okay, first we need to talk about, like, do you have an accountant you're working with? Do you have an estate planning attorney who's helping you? Are these people talking together? Does the accountant know? Is this going to be a taxable event for you? Is it, in a trust? Like where's this money coming from? And what are the tax implications? Number one. Number two is like, what are your goals? What do you want to accomplish with this? Whether or not you're inheriting it or you're, earning money just through your job and, have some extra after you invest in your 401k. Like, what do you want to do with it? What goals do you want to accomplish? So we sat down and we built that out. We looked at, there's a investment property that they want to buy. They want to buy it. They want to go there and live in it part of the time, bring their family there part of the time. And then the rest of the time they want to rent it out. They wanted to build a real estate portfolio as well. So we have to figure out what money needs to be allocated towards investing in buying condos so that they can rent it out. They wanted to pull a percentage of they wanted to pull a certain amount of money out of their portfolio every month to supplement their income that they were making from their jobs while they adjusted to this new wealth. And how was I supposed to say invest in this, this, and this, or this if we didn't know what their goals were? So for example, if I would have invested all of their money in the stock market, but that year was a 30% decrease, and now they wanted to take money out and go buy a rental property, well, they would have 30% less to pull from. So in that case, we allocated a chunk of money to just a high interest money market mutual fund that sat there until they were ready to extract it to make the down payment for their next rental property purchase. So from there, there was the most important part was, here's this portfolio that we need to create, and we want to pull income from it on an ongoing basis. And now what do we need to invest in order to make sure that we can pull X amount out of it, but still make sure that we're exposed to growth assets so that we don't give up on the future growth of the total investments, even though we're pulling from it. And so from there, then, I go out, and in this case, we wanted to preserve the growth of the portfolio, but we also wanted to create some income. So again, for their specific situation, it was, we need to invest in stocks, we need to invest in some fixed income, and then within there were some packaged real estate products. So when it comes to what to invest in, like, you have to know what you want. And you need to know your risk tolerance. If you're ready to go all in on life and you're like, you know what, I know that I want to build a business, I want to scale it, and I want to sell it. And nothing else needs to get in my way. And I am comfortable doing that and not saving any money in my personal wealth. Like, that's very risky. But that's also, if that's something you want to do, then that makes sense for you. Like, go all in, build that business, scale it, sell it, and sail off into the sunset. If you're somebody that wants to invest in real estate, and you can invest in real estate in a lot of different ways. You can buy individual properties and manage them themselves and rent them out, or pay somebody to manage it and take that as income. That's very risky because, you're investing in only a few properties. You could also go and invest in a public real estate investment trust or a private real estate fund. There are so many ways to invest. But if only investing in real estate is something that you want to do, then by all means, go do it. But if you want to invest to make sure that you're meeting certain goals, or you want to invest so that you make sure you're exposed to different types of investments, then you should be looking at all of this and making sure that you have a diversified portfolio in a way that allows you to absorb when things don't go well. We could get into a lot here.
No, it's great.
I'll stop there and let you guide the next where we're going with this.
No, this is
a lot of ways.
That is so beautiful. But and I like what you said. Know what you want, right? Know what you
Mhm.
want because you can create a portfolio that works with the goal or goals um, for multiple things. You just have, but the client has to come with you with a clear end game in mind. If we're investing for a short term or the long term, are we investing for an immediate goal or a goal 5 years down the road? And so
Mhm.
we can allocate accordingly and whether it be asset preservation, capital preservation, or if we're moving into the realm of we just want income, we want to provide an income for ourselves. Um, Down the road, we don't need this money right now.
Mhm.
All the things.
Mhm.
But that's a conversation that can occur today with you watching this and then going to Miss Nicole and her team and reaching out and saying, we want to achieve these different things. And we can and do you have any hard fast rules that you follow by like the 70-20-10 rule, dollar cost averaging? Do you have any hard fast rules for the average investor, the person watching you from the beginning just now?
Yeah, when it comes to investing, some of my hard, fast rules are, you know, you need to, really be comfortable with what you're investing in. You need to understand what you're investing in. You know, I love dollar cost averaging if because it's a really great way to you have two goals. You want to accumulate money for some goal, okay? You want to have growth in the portfolio over time if you give it enough time. So you have these it's like there's unknowns, but with dollar cost averaging, you temper the possibility that you're going to, you know, lose a lot of money when the market goes down. So let's say you took $30,000 and invested it in the stock market and it went down 30%. You lose 30%. But with dollar cost averaging, so you set a goal and you could say, okay, let's say I want to save $30,000 on the line. You take a chunk, you invest it 1 month, you invest it the next month. If the stock market is doing well, you're buying less shares. If the stock market is not doing well, you're buying more shares. And over time, you're tempering that volatility. So instead of exposing yourself to like a 30% decrease, you're buying at different price points in the market. And what's great about this too is over time, if you're dollar cost averaging, you can set a goal, set a target that you're investing every month. And then if you invest long enough, what's going to happen is hopefully you end up with more money than you originally targeted. So it's a way to have specific goals, invest it strategically, but then give yourself the possibility of having more money down the line. But the thing is, too, what's great about this is you have a specific goal and you're like, I just want to hit that goal. You're dollar cost averaging into the market over time. Hopefully, you're making money on that. So then you could decrease how much you're allocating towards that goal and put it towards something else because you're taking advantage of the potential of that market appreciation.
Absolutely. And I appreciate this. Thank you for that. And you can adjust over time,
Mm-hmm.
right? So it's not a full blown set it and forget it. I'm sure there's investments that you have that can do that over time. Like they have a dedicated growth pattern or a dedicated growth trend or
Mm-hmm.
an asset that is more consistent or reliable. But also too, again, that's a perk, guys, right? That can really be a perk when the price of something, the price of these bananas have gone down. And so the same $100, $200, $500 is buying more bananas, right? So when and if that investment goes up, it can average because now you own more shares of that company because you bought it when it was cheap, right? Because you never changed the habit. And so that's why Miss Nicole started with understand your temperament, understand your who you are. And so she can, and a financial advisor can advise you in the path that also matches your temperament. She
Mm-hmm.
will not walk you into an investment, or any member of her team will walk you into an investment when you don't have the temperament for it. Like, man, I got a prospectus today, or I got my quarterly. Miss Nicole, what's going on? Because I'm seeing nothing but red. That's what we talked about. Remember this conversation, and you adjust accordingly. That's the power and the perk
Mm-hmm.
of a financial advisor. So
So there are some trends that I'm seeing. I think you had asked me that before, that ties into the conversation about what are some things that I follow. So this is something that I follow. There's a lot of people coming in interested in investing in real estate, interested in passive income, interested in cryptocurrency, interested in private equity, venture capital, angel investing, all the things that are considered alternative investments. And it's a really exciting time for investing, because we have access to now these asset classes that, either didn't exist or we didn't have access to before. Private equity, venture capital are becoming more accessible to average investors than ever before. And these are the things that have a really high, you could make a lot more money with these investments. They're riskier. But when clients come to me and say, I want to start investing in these assets. Well, why do you want to start investing? Because I want to be able to go to dinner with my friends and say I'm investing in cryptocurrency. Like, I'm all for that. I'm 100% all for that. But let's be strategic about how to implement it into your portfolio. It's not all or nothing now, despite what social media and YouTube want to tell you. The fundamentals of investing, they haven't changed. The products and the access to investing have. So when it comes to financial planning, investment advisors will want to tell you all day long, I have the secret sauce, or I'm this, or I'm that, or I'm the one that's going to make you all the money. Nothing's really changed in the world of financial advising. What has changed are the types of investments you can invest in. If you want an income producing portfolio, 10 years ago, you couldn't invest in a cryptocurrency and then stake your Bitcoin. Like, that didn't exist, So now we have like a very traditional concept and a very untraditional asset. I'm not trying to tell you that you should go stake your Bitcoin and make income off of it. But, when it comes to putting together your investment portfolio and you want to invest in these assets, like, what percentage makes sense so that you feel like excited, and there's this additional layer of enhanced returns that we can chase, but doesn't put at risk the investments that you need to live your life and retire off of. It's this chunk of like, let's go big, but if you lose all of it or it goes south, you're still good over here.
Still okay.
You have this insurance policy over here. So yeah, it's really an exciting time. Lots of new investments out there.
Absolutely. I want to help our audience to make that connection. So what is the strategy? This is the great mind that she has. The strategy she's talking about is asset protection, right? That's a part of wealth planning. And so when you combine something that's high risk, she can protect you with, there are assets, there are life insurance policies that have depending on the company, depending on the policy, you have to talk with her and can set up a consultation with her team. But there are life insurance policies that can protect, that have a growth pattern to them. They have a growth mindset and they've consistently performed over and over again. There are policies that pay dividends over time. And so she can protect that thing, because whatever you're trying to protect with a policy or a bond that has a consistent yield, or an investment strategy that has a consistent yield because of its trajectory, going back 5 years, 10 years, however long you want to look back at your history. And so you can mitigate risk that way. And that's a unique strategy as you can't get from TurboTax. TurboTax will never, he'll never tell you.
And I'm glad you brought up investment policies or insurance policies as well. This goes back to, what's the thing that I should invest in? That's an investment. People underestimate the power of having an insurance policy or a long-term care policy. So when you're thinking about investing, it's not necessarily the specific investments that you should start with. It's, what are these buckets? So you have your high growth, if it makes sense for you. you have your more traditional, long-term growth investments, which for a lot of people listening will just be your 401k. And then you have the asset protection level, because the best way to win is to not lose. That's my favorite saying. And this right here is going to protect all this. So if you have an insurance policy, and let's say that, you prematurely pass away, which is like so sad to talk about. Well, a lot of times in finance, like we just talk about death. Like, what do you want your legacy to be when you pass on? Or, what happens if you pass on? Like, is your family protected? That insurance policy can be a way to make sure that you do leave a legacy to your family, and then in addition, umbrella policies are things that are so overlooked. So an umbrella policy is additional liability protection. So your assets, like, they're out there for people to come sue you over. And I don't think people realize that, like, even if you don't have that much, like, you get into a car accident or if something bad happens and they find out that you have money outside of your the insurance policy that you have on your car, like, they're coming after it. They're for sure coming after it. And something like an umbrella policy will give you additional liability protection so people can't come after it. So it's the unsexy part of investing that, I straight up had a client get mad at me and short of kick me out of the door for recommending an insurance policy to her. Oh yeah, because insurance policies sometimes get a really bad reputation because you can make a lot of money from selling them. I don't sell a lot of insurance policies, but I do make money if I do sell an insurance policy, but it's by no means the main source of my income. But I think it gets a bad reputation because of the people that push the insurance products because they make a lot of money. But it is an incredible tool that you really need to, you should consider if you want to protect your assets. And, I'll give, I obviously can't say her name, but I give you a little bit of the background. So this person had, gotten into a really, really, really bad accident and didn't qualify for long-term care. And the only way we were going to get a long-term care protection for her was through a life insurance policy, because with a life insurance policy, you can have a long-term care rider and you don't have to qualify for long-term care. You just have to qualify for life insurance. And in this case, we were pretty confident she would, despite the accident that she got into, because it wasn't it wasn't hurting her, her health today, but it could have in the future. It could be catastrophic, from complications from our injuries. And so, I was so proud of this product. This is so great. I am so excited. This solves all her problems. Like, we nailed it. And I go into the meeting and I thought she was going to fire me for offering this thing, and man, that was an ego hit for me. But it was a mistake, because these things provide, it's hard to think 30 years in the future, but in my mind, if you have that protection, then go start the business. Then you're covered. You're not going to have to worry about it in the future. You're not going to have to worry about paying for your long-term care if anything were to happen, hopefully, and you never actually needed it. But at the same time, if she didn't need it, she could have gone and taken out the cash value of the policy and funded a business or used it to fund her retirement. So there's just so many incredible tools. But then if you have that, you might feel a little bit more comfortable to invest in the things that you want to, that are more risky. So there's these layers that they're not in silos, they work all together. And if you do it the right way and you do the work on the front end, you do the financial planning and you figure out truly what is the purpose of all of this, then what you invest in is so much more clear and they're so much more accessible to you at that point.
Absolutely. That is an incredible strategy. That is an incredible mind. The best strategy that I saw live in person was the financial advisor I worked under for some time. She incorporated a life insurance policy. I think the best advisors do incorporate life insurance policy because this individual had a business that they were owning and operating, and to mitigate risk, they had a business partner. And in the loss of that business partner, the life insurance policy was taken out on behalf of the company because you're an asset. You're an asset. You're an
Mhm.
asset not just to your family, your wife, your husband, your spouse, your kids, but you're also an asset to, and your income is an asset.
Mhm.
And so
Mhm.
how does a CEO, an entrepreneur protect their 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 future if my business partner goes away? Right? That's a
Mhm. Mhm.
huge hit. That's a huge hit to my business. And now I may have to come back to my financial advisor and say I can't do this anymore because I've lost this asset to my company. And it's not
Mhm.
necessarily a laptop or a computer, it's a whole individual. So
Mhm.
don't shun life insurance when it comes to asset protection, wealth accumulation. It's a tool.
Mhm.
This all comes together, and Miss Nicole and her firm are helping you bring those pieces together.
I also had
Sorry, the crowd goes wild. The crowd loves you.
beloved. Uh, yeah, you don't think it's going to happen to you. You really don't. And I had a client that this is such a terrible story, but he was murdered.
Mm,
And luckily, we put a life insurance policy in place. I mean, you don't go out one day thinking that your client's you're going to get a call saying that somebody you work with, but it happened, you know. I see more real life situations in my job than you would think. But yeah, he had a $5 million life insurance policy, and his kids not inherited, but received $5 million from the life insurance policy, and that covered a lot of the costs for the estate for him. And without that life insurance policy, there would have been a little left in terms of legacy for his young kids.
I love that.
Mm-hmm.
I love that. That's a big help. That's huge. Protect, protect, protect. This is absolutely necessary. This is absolutely what's missing from how we handle our finances. What are some things that you've seen clients do, some mistakes, some faux pas they fumbled the ball on? Um, what should someone not do with their money? Do you have any of those tips or strategies that you can share? What should I not be doing with my money?
I think if I share what should I not be doing with my money, on this one, it might be considered financial advice, but I will tell you a story of something that somebody did that in that situation was not a great idea. But at the time, it was during COVID when like cryptocurrency we were all going nuts, or, he basically took his entire 401k, rolled it over, and invested it in some meme coins or some I can't remember exactly what it was, but it was a cryptocurrency, and he basically lost all of the money. I mean, it went down to almost nothing. So when
Mm,
it yeah when it you know he was trying to bet big, but it didn't really make sense for his investment strategy. And it's trying to solve your money problems with money never works. If you think you're going to solve all your problems by hitting, the next investment, listen, you hear about the winners, but what you don't hear about is the majority of the other people that are losing money when you hear about some of these gimmicky investment strategies. Uh, so that is one thing that I, definitely say is don't try to solve your money problems with investing.
absolutely. What are your thoughts around debt? And what is your most unpopular opinion about debt? If you have any, you may not have any
Yeah.
negatives about debt. But what are your thoughts around debt when it comes to wealth building and investing and finance?
Yeah. Pretty similar to other financial advisors. I don't think I'm going to say anything earth shattering here, but there's just tools you can use. If you're carrying a credit card balance and you have something else that you need to pay for, or something breaks in your home and you need to pay for it, there's so many tools you can use. You can open up a credit card with zero interest for 12 to 18 months and put it on there and get a free loan basically, or you have some extra debt that you don't necessarily want to sell. If you're in a situation where you don't want to sell your investments to pay off a certain debt that you have, let's say it's credit card debt, there's things you can utilize to buy yourself some time, which, you could open up a credit card that has a introductory rate and, give yourself a year to 18 months to pay it off and let's say it could be a situation where maybe your stocks just took a huge hit and you don't want to liquidate to pay off the credit card. You're like, oh, give myself at least give me 18 months to see if this thing will recover. There's things like that. There's definitely ways you can utilize it. When it comes to buying cars, I'm a hard no on, if you can avoid it, buying a car and taking out a car loan. For me, buying a depreciating asset just because you want the fancy, beautiful car. I like driving nice cars, but I'm not going to get the Range Rover. I got the Nissan Armada, so it's not, still great cars, but that's how I view debt. And then when it comes to investing, if you're investing in a real estate product or a house or a home to rent out, like a mortgage is great because you are going to be paying that off, and it's not your money. The income that you're earning from that home, can pay off your mortgage. And so there's a lot that you can do with it. I don't really, but at the same time, it's like if you want the nice car and you're willing and can afford to pay the car loan, and that's going to make you feel good, and you drive to client meetings, like it's not the end of the world if you have a car loan, if you think that's going to help you in other areas of your life economically. I don't think it's a black or white answer. I think you need to look at debt in a way of, how is this going to provide value or bring me joy? And if that's like direct economic value, great. If it's not direct, but that this thing will allow you to show up better to the world, you have to make that call.
This is powerful, y'all. So there is so many avenues about money and finances, and I really enjoy this topic because finances, you can do a lot of things when you surround yourself with quality people. When you surround yourself with Miss Nicole and members of her firm and getting connection, you can do some very incredible things with money, y'all. So I'll share a story for me. One of the most unique things I did with my investment is I had quit a job. I had resigned from a job. And I utilized my 401k. One of the things people don't know about 401k or Roth IRA is you can actually withdraw the contributions that you've made, not the profits, not the gains, because that'll create a taxable event. But if you invest $3,000 with Miss Nicole and that money makes you an additional $3,000 in profit, you have contributed $3,000. Now, what's in the portfolio is a total of $6,000, but out of the six, you have contributed three. So that was a unique thing that had I not surrounded myself with quality financial gurus, because there was a piece of real estate I wanted to invest in and I couldn't. There was something I wanted to do to give my money a higher yielding. And so knowing that allowed me the opportunity and the foresight and to have the conversation with smarter people than me at the time to be able to invest in some other asset classes and other dividend paying performing investments. And so that's I love the thought process that money is a tool. You said this earlier. You don't have the conversation that, oh, I can't afford it. It's how can I make this a reality? What do I need to do? And that mindset shift alone takes people out of a very stinking thinking mindset that we need to get out of. And I think that does a tremendous amount in addition to what you do. Because Miss Nicole, you although you wear a very big cape and you're the best of one of the best, you can only do so much when someone is unwilling, right? I can't drag you. She can't drag you to water, y'all, right?
Mm-hmm.
And force you to drink from the well. You have to be willing, and you have to change your mindset around how you view money. And do you agree, Miss Nicole? How does emotions play into the money game? I think it plays a big factor in that. Do you agree? Disagree?
Yeah, emotions play a huge factor in it. Emotions are the thing that I see that are limiting people the most. Either they're scared that they're going to make a mistake and then they don't invest and then they miss out on, the great market rally we've had over the last 5 years. And that's one of the things, like that emotion, that fear is just holding you back, but also then there's this, I'm going to miss out if I don't invest. I have to invest in this. And I heard that is going to make me a lot of money. And then you invest in it and you lose your money, so you have to take the emotion out of it sometimes. And you have to just look at the facts and educate yourself.
Absolutely.
Mm-hmm.
Absolutely. There is a oh my gosh, I forget the name of the book, but there's several books, any book. Educate yourself, y'all. I
The
think that
psychology of money.
the psychology of money. When you
Is that the one? Yeah.
yes, thank you. Thank you. When you guys you money is a tool, and when you change your mindset on how you view money, you'll be able to do things that you would never imagine. You'll be able to do some incredible things with the data, with the facts that
Mm-hmm.
Miss Nicole is getting you and showing you. These are the facts. How you feel about it. Well, wow, what? My money is doing that for me. Let's do some more. Or what else can I do with it? And that's why I really I I love artificial intelligence. I love technology, but can you share some reasons why a financial advisor is better than the robo advisors out there? Why should people still set an appointment with a financial advisor, a skilled financial advisor, and
Mm-hmm.
what questions should clients be asking, or potential clients be asking
Mm-hmm.
their financial advisor to do? What's some good questions I can ask my financial advisor who may be a good fit or a bad fit for me?
If you know what you want to invest, or how much you want to invest, you have like one account and you are savvy enough to go to a robo advisor. I mean, the robo advisor probably will do just produce just as well of a return as the financial advisor if you're investing in similar products. But the robo advisor doesn't have the emotions. It doesn't have the ability to understand what your goals are. Now, you can go do a financial plan online, but that online financial plan isn't going to see that you had some hesitation when you talked about, like, you know, saving for your kids' education. Okay, well, what's that hesitation? Let's talk that through. Okay, well, you don't want to fund your kids' education. You only want to fund 50% because of these reasons. There's just so much that a robo advisor isn't going to be able to help you with. Also, too, a robo advisor won't have access to the alternative investments. So if you're looking for a well-rounded investment portfolio, they're not going to be able to go out to the universe of investment products and be able to fill in your need with that asset class. So, and a financial advisor, a good financial advisor, is also going to do financial planning with you. So there's a few terms. Let's define them. So there's a financial advisor, and a financial advisor can be many things. They can offer financial planning. They can just invest money for you. It really depends on how their business is structured. So you want to ask, like, you're a financial advisor, what exactly does that mean? What services do you offer? Do I get financial planning included? Is financial planning an extra cost? And then there's a financial planner, which they're just a financial advisor. There's no difference between a financial planner and a financial advisor. The financial industry loves to confuse you. Like, we love to confuse you. We like to make it as complicated as possible, So you just have to ask, like, what services do you offer? In my practice, for all my clients, I offer financial planning and investment management, because I believe that I can't make prudent investment decisions for you without understanding your financial plan and your goals and what we're trying to accomplish. So, that's the first thing you have to figure out. Then you have to ask them, how are you making money? For an independent firm like mine, I charge my clients a percentage of assets under management, and it doesn't matter what investment product we're investing in. Like, I don't make money off of selling you a certain investment product. I don't make money off of, selling you a specific mutual fund. Now, there's other firms that do. So a registered investment advisor is an independent advisor. If they're fee only, then they're only making money off of the assets that they manage for you. Or they may charge you a one-time financial planning fee. So there's a few different ways they can do it. But if you have to ask them, like, are you making money from from the investment products that you're selling me? Because that causes a conflict of interest. Because what are they going to do? They're going to sell you the products that they're making money off of. Now, that could bring up other issues, like how expensive is that product? So not only are you paying the investment advisor a fee, but now they're making money off of this product that they're selling you. And there's something called an underlying investment manager fee or an expense ratio. How high is that? If you're talking about expense ratios when it comes to Fidelity funds or Vanguard funds, then it's most of those funds are really low. I mean, 0.1%, 0.02%. I'm just giving you examples. Don't quote me on this, but there's other funds that you can invest in, index funds, which, by the way, are just mutual funds. They're not two different things. It's a whole other conversation. But, you could pay 0.5%, 0.75%. So now instead of 1% to your investment manager, you're paying 1% to your investment manager and another 0.75% for this product, which there may be equal and just as good of a product out there for much less. But your advisor's suggesting it to you because they're making money off of it. And that's really what you ideally would like to avoid.
Absolutely. You would absolutely love to avoid someone who's and financial advisors have a fiduciary responsibility to their
Mm-hmm.
clients. They have a fiduciary responsibility because their license is really on the line. And financial advisors have been taken out of business and have been sued because they have they have given investment advice to their clients that weren't in the best interest of the clients.
Mm-hmm.
And it was in the best interest of the financial advisor because they get paid a higher commission or they're incentivized highly to sell this product to you, but it's not necessarily it wasn't necessarily good advice for you. And so that is also a great point that you bring up is the robo advisor is usually kind of very niche. It's stocks,
Mm-hmm.
bonds, mutual funds. They may mess with some crypto, they may not. But a financial advisor, especially your practice, you have the full gambit: financial strategy, investment
Mm-hmm.
management. You bring taxes into the conversation, which you're not going to get with a financial advisor. A financial advisor is going to plug and point you to some other
Mm-hmm.
resource, some other partner program, that's some other affiliate that you have to get connected with. Whereas a
Mm-hmm.
financial advisor you can be on a three-way conversation with your tax professional, with your financial advisor, who's also your investment manager, and also they manage your risk, right? They you have some life insurance, and now you have a strong foundation on building that overall wealth. When you think of wealth, you should think of money as a three-legged stool. I like that phrase. That was kind of what was taught to me. Is without one of those legs, the whole stool is going to lean to the side, or it may actually
Mm-hmm.
fall over. And so you're not going to get that with a robo advisor. Robo advisors, there's typically niched in, or they're typically locked in and limited in what they can provide. Whereas you can that robo advisor is not going to feel the feeling of what you're feeling today, right? They're not going to feel that, oh, the stock market took a hit. The robo advisor has no passion, no emotions to that,
Mm-hmm.
and researching how to mitigate that risk. And by the way, robo advisors, there's an advisor, there's an individual behind the scenes. So why pay the extra money for a third party agency when you can just go straight to the source, right? You can go straight to the financial advisor instead of some third party agency. Those are some really great points, Miss Nicole, that you brought up, and I love how you've incorporated everything. I think of what you do as you're the doctor of money, right? Right?
Yes.
If you go to a hospital or a patient first or any clinic, and you can go see the doctor, get your prescription filled at the doctor, get your knee brace, get your back brace, and get your prescription filled in one place, that that's necessary versus okay, I gotta go over here and now I gotta drive over here and I gotta make these phone calls to this 1-800 number because they don't have an office or they don't meet clientele, they don't have a phone number. A lot of those things are really being pushed into that. I hate having to call the call prompts, right? But what if you
Mhm.
had a resource like your company in their back pocket that they can say, well, everything I have is with Miss Nicole and her firm, and I don't have to go to some third party. And my wife, right? My partner doesn't have to make 12 different phone calls to find out where our assets are. They can make one phone call to Miss Nicole's firm and get all or most of their questions answered because it's all in one place. It's consolidated versus scrambled all over the place. So
Yeah, that's thank you so much for all of that. That was beautiful. Here's the thing. I love helping my clients vet investments that I'm not managing. And it doesn't happen all the time, but there are situations where I'm not the expert. So if they want to go invest in a real estate property and they want me to help vet the deal, I can help them with that, on the financial planning side. And that's something I do offer my clients. You know, financial advisors, they have the incentive to want to manage all of your assets because the more I manage, the more money I make. But listen, that doesn't work for me because my goal is to make sure that you're set up on the financial planning side. And if that means that you are going to be making investments outside of what I can offer you, then like that's part of your financial plan. But what I do is I house all the information in a financial plan with my financial planning software. So we include all of that data and all of those investments into your bigger picture. So the money I am managing for you, I can make better decisions on.
absolutely, absolutely, and that's exactly what I'm saying with that is you can manage all those things and those
Mhm,
assets. And again, if something happens to me, my wife isn't left out in the
mhm,
cold. She can make one phone call and say, "Oh yeah, your
mhm,
husband who passed away, all the assets were at Fidelity, or he had some
mhm,
policies here. Here's the number. Here you go." Versus her having to dig through tons and tons of letters and statements
mhm,
and things like that. She can go to one shop because you have record of it. Yeah, he told me about that Fidelity policy. He told me about that Mutual of Omaha policy. Yeah, it's this is the company that you need to contact. That's convenient for my
mhm,
partner. So that's a
mhm.
tool. That's a plug, y'all. Love it. Love it. Love it. Miss Nicole, if you had a magic wand, you had a magic wand, money was no issue, what's one financial thing you would change in the financial advisor space that you wish you could change? If you had a magic wand, money was no issue, one wish, one wish granted, no matter what it is, what would you change about the
Mm.
financial space?
I would find all the really good advisors that are having a hard time getting jobs because they don't necessarily have a huge book of business because that's what all the big firms want, or they want advisors that already have books of business or can bring in and are hobnobbing with millionaires. I would find all the great financial advisors and I'd create a firm where they can all come work at, and we could build a really, really incredible group of people that are giving the best financial advice. Because what the problem is it's really hard to make it as a financial advisor. You have to really have some thick skin, and it was not an easy journey for me to be sitting here saying I own my own firm. Like, let me tell you, it was a grind for a while. I almost didn't make it, but I stuck with it because I really believe in what I'm doing. And I think there's a lot of really great people out there that have the ability to give good advice. They just aren't given the opportunity. So I think the problem isn't the system in terms of like investments and access to investments. I think we're solving that. The problem is access to good the ability for really good advisors or people who should be financial advisors actually able to be a financial advisor.
So you're saying there's not a one-stop place where someone can go and get all the financial good financial solid advice from. There's not a one-stop shop.
Well, I think there's great firms out there, but it's really hard to be an advisor. You have to you either have to work with a firm that's going to invest in helping you grow, which I don't think there's enough of those firms out there. Most firms are looking to either acquire established talent or they're looking to acquire other businesses. So in order to be a financial advisor, you have to build your own book of business, which is not easy. It's really hard to get people to trust you with their money, like handing over their life savings and, trusting you to make good decisions with that. So, I think there needs to be more women in financial advisors. I'm always trying to recruit women who I think would be incredible advisors, but they don't want to do it because it's really hard and you won't make a lot of money in the beginning. I just think there's people that don't even consider it because the path to be a financial advisor is one that's filled with mostly failure. Look at these big firms, the success rate of new advisors coming in is very low.
Yeah, I totally agree. I remember being approached with what was it, Edward Jones? Edward Jones was looking to open up a new branch where I live, and the funny thing is when you get licensed, y'all, your license is posted on a public domain, so they can peruse that. That it's not a secret, right? Your license number is not a secret. It's actually listed on a registry where others can look you up and look up your license number. And so I was approached with Edward Jones, and it was just like they weren't diverse enough. They weren't diverse enough to offer the things that people needed, right? They were very limited, and I think that's a detriment to only offer Edward Jones policies or Edward Jones things. There are going to be things that a customer may need that Edward Jones doesn't do, and they don't deal with that. And that's not helpful to the client who has a life event or is trying to mitigate risk. If all I can get is Edward Jones based products, that's not helpful for me. And I think that's not helpful for most people. So that's hence why Miss Nicole wants that. And that's why she made that wish. And that's why she's actually doing it. She's not just talking about it. She's becoming the thing that she wants to see in the world. And that is significant. That is huge. And that is what's necessary. Go ahead.
Yeah. So I was going to add to that. Experience is so much more powerful than like designations and this and that. Like I'm licensed to be an advisor, but the things that are critical for understanding people and understanding how people function and what they need is life experience. And so some of my clients are entrepreneurs. And like for me, I wanted to create a space where I can create jobs for other entrepreneurs I want to just like create jobs for other entrepreneurs, create jobs for other people, but also I'm interested in acquiring a business. So I am also part of a team. So I have my own practice, but I also am a partner in a practice that I am working towards acquiring. And this has been a really fun experience for me. And so they're older advisors. They're in their mid to late 60s. I just turned 40. So we're at different periods of time in our life. But this experience, so I really feel like honored to get to work with people who have been there before me. I mean, they're managing some serious wealth. And so to get to see that, but then at the same time, want to make sure I'm creating space to create jobs, but also access to other investments that you wouldn't get if you go to, an Edward Jones. I think access to investments is something that has historically been a huge issue, especially in the private markets. Typically, they were only reserved for the ultra wealthy and the high net worth. Now we're seeing a lot more access through funds, through companies. A lot of independent firms are creating private investment companies as well to give access to their clients, because the private investments are the investments that are the ones that are risky but have the potential to make you a lot of money. And the ultra wealthy kind of held that close to themselves and didn't really let other people have access to it, especially the Merrill Lynch's, the JP Morgans. There wasn't, like, you couldn't get access to those unless you were with a big firm. And if you didn't have a lot of money, then you couldn't work with that big firm. And so that's why the independent RIA space, independent investment firms are popping up, so that we can source those deals and bring that access to our clients who historically wouldn't have had the ability to access those investments. And so, like, we're kind of cracking the egg here and getting rid of the shell. And so we're able to, we're recently unlocking a bigger universe of investments for people to invest in.
The financial verse, fintech. We are breaking the mold on financial technologies and our future technologies and how what we do with money. And I that is a great thing. That is a necessary thing. I really hope this continues. I hope the mission. I'm glad you made it, right? First off, I'm glad that you survived, right? I can imagine it's hard. It's hard. I think, I think Edward Jones, what they offered was a tiered approach. So I think, like, your first couple years, they offer you a salary. So they pay you what your last income was. So if you were at a corporate America, you got whatever your salary was, and it would pay that for like 2 years. And during those 2 years, you need to be out and about, going at it, finding new clients, whatever you got to do, mailers, flyers, whatever. After the 2 years, they're going to flip you to a commission-based structure. And then after you've proven success with that, then you move up in tiers. So your commission changes and restructures along as you grow and build out clients. But that is difficult. It is difficult to find and serve people who don't even, people, again, it's still taboo in 2025. It's still taboo for people to sit down with a financial advisor, sit down with Miss Nicole, and like she said, that happened to me this weekend. This past Sunday, I was invited to a organization, a wealth fund that is investing in oil and gas and natural resources, and I enjoy those conversations, and I love being involved. But again, those were held close to the chest. Those is what the robber barons of the back in the day used to hold close to the chest. And now you and I and Miss Nicole and people like us, right, human beings, can get involved with stuff like that. And that is a true honor. And Miss Nicole is paving the way for us to get access to those things with her firm and what she's doing. And she's pushing back. And I appreciate that so much. Miss Nicole, is there ever a bad client, or are there people out there that should not invest their money? Are there people out there that should not be messing with finance, investing stocks, bonds, mutual funds, or anything of the sort? You need to just keep your money under your mattress and call it George.
There are a lot of people that can invest on their own. And I think where we are in this day and age, you can go online, and if you want to learn how to invest, you can. If you have the time and the resources and the energy to figure it out on your own, like with AI, ChatGPT, and all this stuff, you can go find the information. But there's a lot of people that are working, doing a lot of other things, and they don't have the time or energy. Those are the clients that I work with, So if you want to do it on your own, like, there's so many resources, and I'm happy to point you in the direction. But if you don't want to do it on your own and you need a partner, you need somebody to be, with you as you accumulate wealth and into retirement, then that's when, at least for me, my practice, those are the types of clients that I work with. So I think there's not a bad client. It's just, does it make sense for you to work with a financial advisor? Or, Do you want to invest, and can you? And if so, there's a lot of other great places where you can do that, like a robo-advisor.
Absolutely. Where is your, it's not investment advice, it's a personal question.
Yeah.
What's your favorite investment? Is it real estate? Is it that Charles Schwab SPD, that Vanguard fund that you have? What's your
Mhm.
favorite investment?
Oh, this is a great question. Yes, I have to caveat with this is not investment advice because my situation is very different. My favorite investment, well, there's two. The first one is I invested in a private investment, and it's a alcohol distribution company. So
Ooh,
they changed the way that they've provided alcohol distribution to to the industry. Essentially, they've democratized it. And yeah, that was really fun. I invested in it when it was very new. Like, I was the first seed round investor. And since then, my compliance team may tell me to cut this part out when I share it, but but I've 3x'd my investment in that. Now, investing in private investments are really, really risky. I could have easily lost all my money, but that's been really fun to be a seed investor in a company, see the company develop and expand, and also be now part of two different 409A valuations and see the value of my investment increase. And now they're talking about selling. So they have been for a while, and I know they're in negotiations, and they may be at the beginning of the process. But the idea that if they do sell, I'll not only make 3 times my initial investment, but potentially more, is fun. The second one is a water and index fund. So one of the things that's one of the biggest issues is access to clean water, access to water. And so I've invested in a fund that invests in companies. It's an index fund, but it invests in companies that solve access to clean water. They also have water rights, or they're in the water rights industry, or they're trying to, get water rights for certain states or certain real estate developments. It's really, really interesting. And that has done really, really well. And so I'm going all in personally on water. It's funny that I'm invested in an alcohol company because I am such an advocate for a clean lifestyle. I don't drink much alcohol.
really?
But this is like, I would say I personally am a very health conscious person. But when it comes to investing, like, I'm going all in on the companies that are doing well. Like, I mean, frankly, I do have clients that are like to do socially responsible investing. Okay, I probably wouldn't invest in a tobacco company. I probably wouldn't invest in like a gun company. That's not a political statement. That's just, probably that's just not for me.
That's
But like
personal.
personal, like an alcohol company. Yeah, it's an interesting concept. I loved it. I went all in. In my personal life, I feel very passionate about your health being the number one investment, because if you're not healthy and you have medical costs down the road, it's going to eat up all your wealth. I mean, but if you have $1 million saved and you have all the chronic diseases and you have to go to assisted living facility, depending on how long you're going to be there and how your money is invested, you may not have anything when you pass away. That's how expensive healthcare is. And so on that water note, drinking reverse osmosis clean water to me is just as much as an investment as investing in the water index fund, because our water, this is a whole other conversation, but it's one of the pillars of my life. So drinking clean water, being healthy is going to allow you to live longer, be more productive in society, and have less medical costs in the future for the preventable chronic diseases that we're seeing are a huge issue out there. I drink alcohol. Don't get me wrong. I love tequila. I love wine, but only if it's an organic, no sugar added wine. And I guess I could tell you the wine. I love Aveline. It's like a keto friendly organic grape. They don't add any sugar, so it's when you drink it, you feel like you're in Italy.
No, yeah,
Yeah.
I'm with you. I'm with you. That's a great brand. I didn't even understand that they had sugarless, like gluten-free, non-GMO, non-hormonal, all the things wine. I didn't even know that was a thing until my friend who's
Yeah.
vegan, she was like, I'm vegan and I don't drink regular wine. And I'm like, it's grapes. And she was like, no, it has stuff in it
Yeah.
that makes it not healthy.
My kids are about to walk inside.
Yep. Yep. Okay. So
I feel like we can keep talking though. I hate cutting it short.
no, this is perfect. This is perfect. This has been an incredible conversation. Miss Nicole, thank you for what you do. Thank you for everything that you do. How can people connect? How can people learn more? How can people jump on board and book a consultation with you?
Go to pearlvest.com, PEARLVEST.com, and just sign up for my monthly newsletter or book a call with me.
Absolutely. Connect. Y'all, unfortunately, we are out of time, but this is a real podcast. It's a real podcast with real people, and we are unfortunately out of time. But for our audio listeners, again, that's www.pearlvest.com. Check Miss Nicole out, book a consultation, and change your life today. Miss Nicole, I want to say this to you publicly. Never give up. Never quit. We need you. We need what you're doing. Thank you for what you do. We appreciate you. And for our audio listeners tuning in, for those watching, like we end every show, take care of your friends, take care of your family, and always take care of business. This is your favorite gentleman, Marcus, and the super fabulous espialidocious Miss Nicole Meihofer. Signing off. Love you guys. Bye.